The question about weight of capital is one that I have to say slightly concerns me at the moment, because I think it is very considerable. There's been a number of fairly high-profile joint ventures and transactions in the market which have shown the extent of capital that can flow into this. Yields have come down. They are coming down at the moment, and I think Stefan mentioned the Lion portfolio earlier during the summer, which priced out at a very sharp yield, let's say. And I think that's something just for us to watch a little bit. Having said that, there's going to be much more of it coming as well. I think there's more that's going to come out of North America. There's certainly more that will come out of Asia towards this sector, particularly as they've seen other like-minded investors do lots of deals in the office space, then in retail, and then have tended to go towards logistics. I'm sure we'll see more of that. So I think we have to just be cognizant of that when we're looking at bidding on transactions. And that comes back to something that James mentioned earlier, which is then think about how you're accessing that stock. Are you accessing it by just buying, built, let, long leased assets on the market, potentially from an auction process? Or are there smarter ways of accessing that stock? And that's something that we particularly are focused on, whether it's partnerships with development companies that have been starved of capital on the debt or equity side, frankly. That's something that we think is much more interesting as there continues to be a lack of development activity. So that's what we're focusing on.